Okay, hey everyone, this is Julie, J Trading Strategies. It's 2:03 p.m. on Tuesday, January 2nd, 2018. This is the market report. We had some great trading today. The indexes are taking off, the currencies are taking off, and the bonds are selling off. So I would say the reflation trade is back in action. Good volume today. Came back. I think the traders are back, glad to be back at their desks. And the Nasdaq was the leading market. So I have the Nasdaq up to take a look at that. We had an opening drive, had a little bit of a flush down right at the open, and then it turned around and never came back. So it just took off. A couple of pullbacks, two good pullbacks. This second pullback here was put the highlighter on. This second pullback came to test the prior day high, and then it took off again. Got another longer, deeper pullback, came back up, and we are again pulling back into the zone, buy zone, and then moving back up. This is my high-low 2 indicator, and it is triggering on the yellow line right now. As you can see, these are live entries, so cross recross will trigger a trade. I have it set up so I will only enter once. I won't enter multiple times. But once it crosses and recrosses and moves a tick, it'll give you a signal, and then you can get back in. And then you can also set it up for this red line, so the red and the yellow line. Oops. The red line. Okay. And or everything. This is the yellow line. So and then I've been experimenting with taking this shorter, shallow line also. I'm sort of testing it to see if it's worthy of doing that. I think I do like that. I've had a couple of my members asking if I will go ahead and release this template, and I think I will. Give me a week to work on it. I've got something else I'm working on also, and then I'll get that out to you. And that'll give you a few more areas to trade off of on your high-low 2. This is the high-low 1, but I've added a couple of columns from the direction guide template. You know, you can mix and match these columns, which provide help for me. I've got my current high-low bar here, so that's that. If you're breaking the current high or low, your pivot, you're going to get a signal. So like right here, we broke the current high. So that's what this signal is. And so that's what you want to be seeing in a strong trending condition. So that's why I went ahead and added it to the chart. And then you can mix and match your bands however you like to see them. And my high-low 1 chart, again, stay out of the chop zone. This was the lunch hour as it went just sideways. Don't trade that. Wait for the trend to come back in, and then take your trades. And just like I said, if you get a strong market move like this, you can trade your higher time frame, and that way you can stay in a trade longer. Because if you break it apart, you're going to be jumping in and out a lot more. So there's good and bad with both systems, but you can get used to the markets and figure out if you do like to trade with the larger bar size, allowing you to stay with a trend longer. Um, and again, you don't have to trade for every tick. I was watching a Twitter conversation earlier today where I guess a trading coach, he made several tweets, and he was talking about, there's no way to determine from anyone's software or charting indicators how far a trade will go. And I'm like scratching my head, well, who's trading for every single last drop? Or, you're not trading for every single last tick. You're trading to get a trade when the bar turns, right? And in the direction that you want to go. And then just grab some profit. You're not you're not trading for every last drop or tick. Who cares how high it's going to go? You just want to get the meat of the move and get your profits and go home. All right, enough preaching. And that's about all I have for you today. Keep your powder dry, non-farms, FOMC minutes. I don't know where I guess the inflation's going to be coming back in to the market now, and everybody's been waiting for that. So I saw some Bloomberg tweets that they're expecting the yield to get to 4% on that 10-year. Um, so just keep your eye on these numbers, ISM tomorrow, your GDP numbers and your CPI numbers. And I think we're off to the races. It's a good start for today. So y'all take care, and we'll talk at you tomorrow. Thank you.